like we did with construction CETA. So we'll cover the issues around the audit outcome, which will then affect the financial statements. The performance information will cover the compliance, inclusive of irregular expenditure and fruitless and wasteful expenditure, and then close off with the material irregularities and recommendations for both entities. Chair, as already alluded to by Zama as well and committee members, the language will sound the same, mainly because the CETA's mandate and the issues that we have actually reported on in terms of the audit outcomes are quite similar, like I alluded to as well within my opening remarks earlier on. But I will speak then to the specifics in terms of each of the entities and what then transpired or what we observed as part of the audit and what we reported to management or the executive authority. So with EWSETA, Chair, just an overview of their audit outcomes over the past 3 years. So as Zama has alluded to, they have actually been getting an unqualified opinion, unqualified with findings opinion over the 21-22, 22-23 financial year. And the areas that we're highlighting there is that they've always had material non-compliance when it comes to the area of the annual financial statements, expenditure management, procurement and contract management. But what we're seeing is that in the past 2 years, the consistent areas in which we've been raising the material non-compliance would have been in the area of annual financial statements and expenditure management. And as I give feedback as well, or present on the audit outcomes for the 23-24, we are reflecting on this slide the qualification areas, as they did obtain a qualified audit opinion in the current year on commitments and prior period errors. And again, the compliance areas around annual financial statements and expenditure are still also coming through in the current year, but we'll further unpack that in the later slides. Overall, for EWSETA, what we've observed over the 3 years in terms of their audit outcomes, they have regressed, and in particular, I think the issue still remains around the discretionary grants commitments. And additionally, they also then had a qualification around the prior period error disclosure in relation to the same issue around discretionary grants commitments. So the disclosure that they made in the financial statements was not in line with the requirements of the accounting standards. And therefore, they also then obtained a qualification in that particular area. The culture around EWSETA, what we observed is that in terms of the management, they have put in place, they did develop action plans to address the root causes of the findings that we would have identified in previous years. However, these were not adequately implemented. And I think it speaks to the issue that we always raise, particularly with entities that receive unqualified with findings. Because if you think about it, what it actually means is that when they submitted the financial statements on the 31st of May, we went through an audit process. Management would have been afforded an opportunity to make adjustments or corrections on the financial statements. And ultimately for EWSETA, for example, in 21-22 and 22-23, what it then means is that they were able to then appropriately or adequately then correct those misstatements during the process. Hence, at the end, when we signed off on the audits, we would have then expressed an unqualified opinion. But unfortunately, in 23-24, this process obviously would have not yielded the same results, in the sense that we still had material misstatements that we identified even after going through the audit process and affording management an opportunity to make those necessary adjustments. So I guess the message when we look at the EWCT story is that we need to get to a point where the entities are actually, even the ones that are getting unqualified with findings, are actually correcting the root causes or dealing with the internal control deficiencies as would have been highlighted in the findings that we communicate to management, because that would mean that they have preventative controls in place then to really prevent any omissions or errors when it comes to them now having to prepare the financial statements. And I guess it speaks to the compliance area that we're reflecting on in terms of the annual financial statements, because EWSETA still has that non-compliance as well in the current audit report. And what are we then recommending? And I think I've spoken to the root causes, Chair, I think in the earlier conversation around construction CETA. So I'll just mainly speak to the recommendations around EWSETA. And I think when we go and unpack on the internal control deficiencies, we still talk to disciplines around financial disciplines that are not necessarily consistently applied throughout the year. especially with regards to the daily and monthly processing of these transactions, as far as it's concerned in terms of the discretionary grants commitments, as well as accrual schedules for the discretionary projects. Again, it speaks to the project monitoring activities and disciplines that are not consistently applied throughout the year. Again, we speak to the issue of enhancing the integration of the annual performance reports and the annual financial statements. Again, what you find in your annual performance report, remember the indicators specifically in relation to program 3, which would normally speak to your learning programs and projects which the CETAs implement. Those targets will speak to specific interventions that the CETAs are meant to implement, such as if they're awarding bursaries, any learnerships, candidacy programs, internships. So it will speak to the types of interventions that the CETA is meant to be implementing. And once there is a correlation between what the finance or the performance unit is reporting in terms of achievements of target, these are the same projects that they're reporting on in terms of the commitments from a financial statements perspective. So that kind of collaboration is quite critical and key in the process to make sure that we're all on the same page in terms of the status and the status or progress of these projects, so that there is credibility in our financial reporting and as well as in our performance reporting. The last recommendation in terms of EWSETA would be on the enhancement of controls with regards to review and supervision. This is around the disciplines around the monthly and as well as daily reconciliations that must also be approved in order to ensure that the commitments are supported by accurate and reliable supporting documents. And here we're emphasizing the importance of ensuring that even as we implement these daily or quarterly or monthly disciplines, we also need to ensure that within the process, we are also able to then verify or confirm the accuracy and completeness of these reported achievements or whatever we're reporting in the financial statements against supporting evidence. That is generally what the audit process would entail from an external audit perspective, and those disciplines should be instilled as well by the officials that are executing on their daily responsibilities. And I think it's important because it would mean that throughout the year, we're consistently making sure that at the end of the quarter or at the end of the year, when we prepare our set of financial statements or our annual performance report, we know very well that everything that we have included in the supporting schedules or the supporting listings can then be substantiated by appropriate audit evidence. We then move on to the next slide where we're reflecting on the quality of the financial statements or financial reporting aspects. The two main controls that we are highlighting for intervention is on the daily and monthly controls, as well as the review and monitoring of compliance. And I've already alluded to this, but I'll touch on more detail when we go to the compliance element. But however, on the daily and monthly controls, it speaks to those disciplines around financial management that I was speaking to that needs to be instilled throughout the year to make sure that there is some result and it is effective in assisting us in identifying any possible errors or omissions by the time we then need to submit or prepare the set of EWS. On the right-hand side of the slide, what we're then demonstrating as well is that before, based on the submission that we received on the 31st of May, we would have identified misstatements in the financial statements, and even after the process of audit and allowing management to make certain adjustments on the financial statements, the CETA unfortunately still obtained a modified audit opinion, which is a qualified audit opinion, as a result of the material misstatements that could not be corrected and were identified by the auditors. What does this then mean in terms of financial reporting for EWSETA? What we have identified is that in addition to the actions that management would have put in place and the additional controls that they would have implemented based on issues that would have been raised in previous years, we are seeing that the root cause of the findings, the root causes in the current year have not actually been resolved in that sense, although the action plan itself was developed and put in place. The second part of it was the fact that the review processes implemented by the entity on the preparation of annual financial statements was not always effective, as like we indicated that we did identify material misstatements during the audit, and unfortunately some of them could not be corrected, hence leading to us modifying the audit conclusion. If I then go to the second aspect that we reflect on, it's on performance information. So on the left-hand side of the slide, we are also demonstrating in terms of the annual performance report that would have been submitted for audit, that based on the submission that we received on the 31st of May, there would have been misstatements that we identified, and even post-audit, those misstatements were still not corrected. And again, if one reflects on what the root causes of all this would be one of inadequate reviews, and unfortunately, a discipline of placing reliance on the audit process to identify misstatements. It speaks to the earlier comment around the financial statements. So I said consistently, EWSETA throughout the 3 years has been receiving the material non-compliance in as far as the annual financial statements is concerned, and it speaks to the issue of us observing that in most instances, we're seeing a reliance on the audit process to be the one that identifies any misstatements, management going back and wanting to correct the population. And unfortunately, in the current year, with the outcome that we expressed on the financial statements, that did not yield the positive results, leading in a modification. And again, what we're highlighting is based on this root cause is the lack of effective oversight. We have observed that there was insufficient oversight and monitoring by management, which has permitted errors and inconsistencies in the performance reporting. Again, one of the processes that we highlight that needs to be instilled as a discipline is making sure that over and above us implementing these daily and monthly controls, there needs to be some element of verification against supporting evidence. And that will ensure that whatever we report in our annual performance report is valid, is accurate, and is also complete and can be verified against appropriate supporting evidence. Lastly, we speak to the weak internal controls over the compilation and review of performance information, leading to inaccurate reporting of achievements. And what this demonstrates is the fact that when we receive the annual performance report, we receive the annual performance report, we reconcile it back to the listings that the entities will submit as supporting schedules for the reported achievements. And again, when we select a sample from those listings, the expectation is that there is evidence then to support each and every transaction that we would have selected and tested during the process. And unfortunately, this was not the case at EWSETA. What we then are reflecting on the right-hand side of the slide is achievements in relation to key performance targets. So EWSETA managed to achieve 71% in terms of the key programs, which is program 2, which normally speaks to your skills programs, and program 3, which speaks to your learning programs. However, in those 2 programs, 29% of the indicators were not achieved. And those indicators are the ones depicted on the bottom right-hand side of the slide. In terms of program 2, where we have those 2 indicators on the top, and then in program 3, we have those few indicators that are highlighted at the bottom of the slide. So again, if you look at the performance of the CETAs and the overall performance in terms of their annual performance report, one can raise a concern around whether or not we are actually implementing the plans and implementing and achieving the targets that we've set ourselves in terms of our annual performance plans, which we are not, based on what we have observed. And for us, this is an area of concern, one that needs to be also given attention in terms of what are the challenges in us implementing or not being able to deliver on the targets that we have set for ourselves as a CETA. If I then go to the third area that we'll reflect on is in terms of compliance. So EWSETA had 2 focus areas of non-compliance. One speaks to quality of financial statements, and this is as a result of the material misstatements that I've already reflected on. So we are then highlighting the non-compliance with Section 55(1)(b) of the PFMA, which requires of the accounting authority to ensure that when they submit the financial statements for audit, that they are accurate and complete, therefore free of material errors. The second focus area speaks to expenditure management, where we identified that the CETA incurred expenditure in excess of the approved budget, which means that they actually contravened Section 53(4) of the PFMA. The other area which was highlighted under expenditure management was in relation to the resources of the CETA, which were not utilized economically as required by Section 57(b). And it also then touches on the material irregularity, which I'll speak to later in the presentation. So that non-compliance was actually triggered by that particular finding. And then the last area under expenditure management that we highlighted on EWSETA is the fact that there was not effective and appropriate steps taken to prevent irregular expenditure. And when I go to the next slide and present on the irregular expenditure, we'll then also just show and demonstrate the annual irregular expenditure and closing balance of the CETA. But in the main, the cause of the irregular expenditure for EWSETA was as a result of the CETA not complying with the grant regulations and exceeding the 7.5 administration expenditure on the discretionary grant expenditure. I think earlier on, Zama would have expanded a bit on it in terms of the CETAs are regulated by the CETA grant regulations themselves, which specify that you should not be exceeding 7.5% of your discretionary grant expenditure should not be spent on administration but rather more channeled towards the core skills development initiatives that the CETAs need to implement. So unfortunately, in this instance, EWSETA exceeded that threshold, and hence we raised the material non-compliance in the audit report as well. If one then looks at the breakdown of the irregular expenditure, on an annual basis, you'll see that they've been more or less around the same amount. So in 2021, we're sitting at an annual irregular expenditure of 7.9, moving to 9 million and 8.2 in 22-23. If one then reflects on the closing balance, there has been a significant reduction in the closing balance, meaning that they're not carrying over as much irregular expenditure accumulating from previous years. So in terms of the irregular expenditure, I did already speak to the non-compliance, which is linked to the previous slide where we're discussing the non-compliance area. Majority of it was caused by that non-contravention with the CETA grant regulation. But again, in prior years, irregular expenditure was caused by non-compliance with supply chain management legislation. So over and above the 7.5 threshold that was exceeded, though in previous years we would have had some irregular expenditure also coming from non-compliance with procurement and contract management practices. And that speaks to, in 2021, if you remember from the slide on the financial statements, where we had a material non-compliance in terms of procurement and contract management. So if one then unpacks the material irregularities when it comes to EWSETA, so we have two material irregularities that were issued. The first one was notified to the accounting authority on 10 November 2023. And if maybe committee members can refer to page 14 and 15 of the briefing note, we do provide details of this particular MIs that I'll just also then just highlight in terms of what the MIs are about. So on the first material irregularity, it was in relation to payments made for a project that did not yield the intended result. So what has happened in this particular instance is that the Department of Water and Sanitation had entered into a tripartite agreement with Rand Water as well as EWSETA in 2015, where EWSETA was to appoint a service provider. This is in relation to the Warren Leaks project that the committee member was asking about a bit earlier on. So they had entered into this agreement where EWSETA would be responsible for appointing a service provider, where Rand Water would provide learners. The number of learners that were initially part of the agreement was 15,000. But in July of 2016, when the agreement was actually signed with the consultant, which is Khanso Consulting in 2016, they agreed to provide a number of 7,000 learners, of which 5,000 of these learners would be water artisans and 2,000 of them would actually be water agents for implementation of this particular project. However, what then transpired is that when the service provider then invoice. So the project was broken down into payments of 3 tranches. So they would pay, the service provider would claim over 3 tranches as and when the project is actually implemented. What then transpired in this instance is that when the service provider then invoiced the EWSETA, they invoiced for the number of learners that was agreed upon in terms of the contract, meaning the 5,000 water artisans and the 2,000 water agents. However, what had transpired on the ground is that there was a lesser number of water agents, water artisans that were trained, and more of the water agents that were trained. But however, the difference with the two is that there's a rate difference, meaning that the number of learners that we had agreed upon in the contract to be paid according to what was agreed between EWSETA and the service provider was actually more than what the number of learners that were actually trained on the ground. So meaning that there was a financial loss that the CETA incurred, in the sense that the CETA ended up paying for more, for a higher value of interns that were trained rather than what was actually trained on the ground. So that resulted in a financial loss. We notified the accounting authority on the 10th of November. And so far, management has effected consequence management, and they are currently following an arbitration process to then recover the balance of that amount that was overpaid to this particular service provider. The second material irregularity share relates then to the purchase of the building. So what had transpired, in summary, to just build on what Zama had presented earlier, is that EWSETA would have purchased a building to the amount of 21 million. They then further incurred additional costs in terms of refurbishment, amounting to 36 million on the same property. This sale agreement, which they signed with the service provider, was around the 13th of August in 2014 rather, when the building was actually sold to EWSETA. Fast forward, then the CETA signed another agreement for another property. For the refurbishments, which I've already spoken to in terms of what they had spent to date on the 36 million. But during 2021 financial year, when we went in for the audit chair, we noted that EWSETA actually appointed property valuers to perform a market valuation on this particular building. And when the property valuer gave a value on the property, they estimated, they actually necessitated an impairment of almost 36 million. And EWSETA, because they needed accommodation, they went ahead to procure new premises, which they are occupying as their new office space with a 5-year lease agreement, which they obviously now paying rent on and incurring other costs attached to now occupying that particular building. So at this point, Chair, with regards to that particular MI, the accounting authority was notified on the 20th of November 2024. And the non-compliance in terms of section 57B was also communicated. However, we are yet to receive then the response in terms of the progress in terms of that particular MI. So, Chair, that is the summary in relation to the material irregularities on EWSETA. I'll then move to the insights on EWSETA without maybe going back to the conversation. I think we dealt a lot in terms of the approach that we followed, but the reflections in terms of the exceptions that we would have communicated to the CETA was similar to construction, was in relation to the learners, 258 of them, that were identified as either previously being trained by the CETA and coming back into the system, or being trained by EWSETA and another CETA within the sector. Additional to that, we also then identified one learner that was being funded by the EWSETA, but at the same time was also receiving funds, or was being funded for the Funza Leshaka program in the same year. So this learner was actually getting dual benefits in terms of interventions from the fiscus. If we then go to the root causes and the recommendations, I'll just reflect on, I think most of the internal controls actually touch on what we would have discussed around the financial statements and the outcomes and the performance as well. So the financial disciplines, again, we're re-emphasizing, Chair, the inadequate reconciliations, which are resulting in a lack of credible reporting in as far as the discretionary grants commitments are concerned. I've spoken in length to the daily and the monthly controls. Again, the reviews by management against supporting records, which is quite critical, and we're still raising it as a key recommendation. And then lastly, around the preparation of accurate and complete financial and performance report that are supported by reliable information. And this is where, even with the process where internal audit is involved, it would be key that such processes ensure that when management goes through a process of either preparing the quarterly or the year-end financial statements, there is verification by officials or even internal audit, in them giving feedback to audit committees regarding whether or not what we are reporting on can be reliably supported by evidence. The key recommendations that we made to the accounting authority to ensure that they also, from their side, as the accounting authorities responsible or in charge of these entities, make sure that there are controls in place regarding the daily and monthly processing. As management accounts to them on quarterly basis, they need to monitor from an executive level to make sure that these controls are actually being implemented by management, and ideally how these progress are given to the boards and the audit committee is through the reviews of the audit action plans, which forces them to reflect on what could have caused or led to the findings being raised, and putting in place then remedial actions to make sure that they address those deficiencies that we would have communicated. Again, it's important that we also emphasize the issue of integration of the annual reports as well as the annual financial statement, so that we ensure that within the entities we are collaborating in terms of how we're reporting for credible financial and performance reporting. Lastly, Chair, maybe if I just go to what we have recommended then to the executive authority in terms of our engagement, is that again we would have emphasized to the minister that it is important that she monitors the implementation of these action plans, to ensure that there's no reoccurrence of the material misstatements that we would have reported. Also, there is a high need to establish clear actions and timelines in addressing these material irregularities that we have identified at EWSETA. And we recommend that the minister herself actually closely monitor this process, as we have alluded to the fact that with the material irregularities, there is financial loss that these institutions are actually incurring. The executive authority was also implored to also ensure that there is adequate consequence management at the entity in as far as these non-compliances that we have reported, as well as the irregular expenditure that has been incurred as a result of the non-compliance. So that will be the end for EWSETA. I will then go on to insurance CETA. So with the insurance CETA, Chair, the audit outcomes have been stagnant for the past 3 financial years. Again, we just highlighted the areas that we were qualifying on over the past 3 years. So you would see that in 21-22, we were actually qualifying on admin expenses and payables from non-exchange transactions, which would be your payables also linked to your administration expenses. In 2022-23, we qualified again on the same item in terms of the payables in relation to our administration expenses as well as commitments. And then in 22-23, they were then qualified on the discretionary grants project expenditure. And the issue around INSETA is due to a lack of financial discipline. And what we have observed with the stagnation over the past 3 years is that the entity is not able to put in controls around the discretionary grants project expenditure by not because the internal control deficiency rather that we identify as a key problem is in relation to proper record keeping that will support or foster credible financial reporting. And the reason why we also emphasize the proper record keeping is that if one reflects on the audit outcomes of INSETA from 21-22 up until 23-24, you will see the only consistent area in which was qualified in 2 years was around payables from non-exchange, which is related to your administration. But the other areas are in relation to different areas of the line items that you would have in your financial statements. But in all instances, the root cause and what led to those areas being qualified would have been a lack of proper record keeping. And I think that is an area we are highlighting so that management can then address this issue, because for as long as we're going to have issues around record keeping, we might find ourselves in a situation where we might also be seeing other areas coming in future if we don't deal with the financial discipline around maintaining proper records. And what we've seen in CETA in terms of the culture is that management had actually developed an action plan. There were additional controls that they introduced in addressing the root cause of the findings that we would have reported in previous years. However, this action plan that they have developed was not adequately implemented. And as a result, there were instances where we identified repeat audit findings. But again, it speaks to the root cause around proper record keeping. So it is important that, and what we encourage our auditees is that when they do develop this action plan, they need to reflect on the internal controls that will assist them in preventing misstatements in any areas of the financial statements, and not necessarily only focus on the findings that we would have communicated to them. What are we recommending then in as far as INSETA is concerned? We are recommending that there be an improvement in controls around the daily and monthly processing of transactions, as well as the review controls as well need to be strengthened, as well as the reconciliations. Lastly, the oversight responsibility must be strengthened to emphasize the importance of complying with relevant laws and regulations. And here we're speaking also to the oversight structures within the processes within the CETA, that as they receive these quarterly financial reports, as they receive this quarterly performance report, they need to interrogate them to the extent of making sure that as they interrogate them and review the action plans, there is that credibility in terms of whether or not the controls that we are implementing or the controls that we are enhancing to assist us to address the internal control deficiencies are actually yielding the results. So those are the recommendations that we are making on INSETA. And if we then go to the detailed breakdown in terms of the outcomes for financial reporting, the three internal control areas that we have identified as needing intervention around the daily, monthly controls, the proper record keeping, and the review and monitoring of compliance, which I'll also then speak to in the coming slides. On the right-hand side of the slide, we also then reflecting on the impact on the quality of the financial statements. Again, with INSETA, we're seeing a similar trend where the submission that was made on the 31st of May contained misstatements. And during the audit process, even though there were instances where there would have been some adjustments that are passed, there were still those material misstatements, which then led to the qualified audit opinion. Again, a trigger or a keyword for INSETA would be around the maintaining of proper records and as well as project management in as far as the discretionary expenditure, which is the expenditure that they're actually incurring on the discretionary projects, which is linked to their core mandate. This reflects a lack of embedded culture for adherence to daily controls within the entity. As I'm saying that when we reflected on the audit outcomes, we can see a trend that in the years that they've been getting qualifications, there has been issues around proper record keeping that has been highlighted as a key root cause. If one reflects then on performance planning, it is a bit of a concern consistently in this area as well for INSETA. There have been material misstatements that we've been reporting in as far as the annual performance report is concerned. We have been identifying material misstatements, and the material misstatements mainly linked to one, the CETA reporting on achievements, but when supporting evidence is requested, it either differs to what has been reported or there's inconsistencies between what management would have reported in their annual performance report and what the evidence actually suggests. So in the process of making sure that they implement disciplines around performance reporting as well, there needs to be controls in place to ensure that that which we report on in the annual performance report is adequately supported by supporting evidence and actually reconciles to what is sitting in the supporting evidence. So meaning there is consistency between what we are reporting on and what the supporting evidence is actually confirming. The third element that we did highlight in terms of the challenges around performance at INSETA is around the adequacy of the supporting evidence, which was not provided on the reasons for the overachievements of targets. So in terms of the framework for performance reporting, there is a requirement that in instances where entities do not achieve on their reported achievement, those reasons need to be provided. And as part of the audit process, we also go through the process of one, verifying whether or not those reasons that have been provided for management for either over or underachieving on any of the targets is actually supported. And we found that in this instance, the reasons provided could not be adequately supported against appropriate evidence. Some of the indicators were also identified as not being well defined, as we identified that there were inconsistencies in both their descriptions and methods of calculation. So as part of the audit process, what we also do is that over and above us receiving the annual performance report, we go through a process of understanding what is the objective of this particular indicator. And what is then, they develop what they call the technical indicator descriptions, in which they will define what is the indicator about, what is the means of verification, what source documents can you request in order for you to verify whether or not we've achieved on this particular indicator, And then lastly, they'll also then detail in terms of what is the method of calculation that we're going to use for us to be able to report on this particular indicator. And we found that when we were auditing, there was actually inconsistencies in how they had articulated or described this particular performance indicator and how they intended to then report against the planned target, and what we were then seeing as management articulating as the method in which they are going to then calculate the reported achievement. So we also highlighted that as one of the issues that we communicated to management. If we then look at the aspect of compliance, INSETA only had non-compliance in one focus area, which is around the quality of financial statements. And again, it speaks without saying that it's in relation to Section 51A. And we have the PFMA as a result of them submitting financial statements that had material misstatements. And then the second part, we're just highlighting that even during the process, we also had, when we afforded management an opportunity to make corrections, there were those material misstatements around the discretionary grants commitments, related parties and other operating commitments and other areas of the financial statements that management were able to process, and obviously those adjustments were accepted. But we are highlighting in that paragraph as well that we did identify material misstatements that were corrected during the audit process, because ordinarily our expectation would be that when the entities submit their financial statements, they're actually free from material misstatements. If one then looks at the overview in relation to irregular expenditure, if I start on the left-hand side of the slide, over the annual irregular expenditure over the years has actually decreased. And if one looks at the closing balance, however, has been increasing, also then suggesting that there is consequence management, or there is irregular expenditure that is actually being carried forward from past years that is not being dealt with in terms of either investigations being written down or being condoned. So there is an area of improvement in terms of there is an area or an opportunity for management actually to go back and deal with this irregular expenditure. So I think we also touched on the conversation around the slide. Maybe I'm not going to detail. This was around the irregular expenditure in the past was around those board members' fees, and I think Zama did fully describe or explain what the finding was about, and as well as the non-compliance with the contract management prescripts. If you allow me then, Chair, to move on to the next slide. In terms of insights for INSETA, we did have a couple of areas that we identified for INSETA in particular. So we did identify that there was 418 learners that were also either previously trained by the CETA itself or by another CETA within the sector. We did identify one deceased learner who was funded during the year, even though according to the Home Affairs database, this particular learner was deceased. There were 18 learners which were also identified to have invalid ID numbers. Again, going back to the process that we alluded to earlier, we do use as well databases from various institutions, but as part of the process as well, when we do identify these issues, we communicate to management and we request for supporting evidence, and that's how we get to a point of then reporting on them when the evidence does then not support what we had communicated to management. And then lastly, we then also identified a learner who received funding from INSETA, as well as was funded by the NFSAS in the same year. So those were the exceptions that we identified for INSETA. If then we reflect on the root causes and recommendations for INSETA in particular, will not ever overemphasize the first recommendation with regards to poor record keeping. And as well as the inadequate, the lack of the daily and the monthly controls. I'll probably just go through to the recommendations to the AA and the Executive Authority, just for the benefit of the committee as well. What we are recommending, what we recommended to the board rather, was to ensure that there is enhancements around the record management processes, so that, when the reports are produced and the financial or performance reports are produced, there is some credibility to it, and we know that we can support those numbers of or statements that we report on in those reports. Secondly, we did also recommend to the board to ensure that there are controls with regards to the review and supervision of these reports, as well as to ensure that they are approved in order to ensure that the discretionary grants expenditure are supported by accurate and reliable supporting documents. Again, it speaks to the principle of ensuring that there is an effective process of record management. And lastly, that the improved controls in place regarding the daily and monthly processing as well. With the minister, what we did recommend in our engagement in as far as INSETA is concerned is that we implored on the minister to monitor the implementation of the audit action plan and to ensure that there's no reoccurrence of the material misstatements, as well as to ensure that there's consequence management in as far as the entity is concerned. And I think a key thing and looking at the audit outcomes of INSETA is that it is critical for us to highlight the importance of making sure that our auditees do not only deal with the findings as raised by the Auditor General, but deal with them from an internal control perspective, ensure that there is enhancement or they reflect on the deficiencies in the internal control environment as a whole, and not necessarily want to respond to a particular finding that would have been raised, but rather reflect on the deficiencies within the environment that will enable and assist in making sure that in future, when we then prepare the financial statements and performance report, we do produce reports that are credible and supported. The overall message, I think we had already touched on construction, so I'll just highlight in terms of EWSETA and INSETA. We are recommending to the committee that the audit action plans of at the EWSETA be obtained and monitor implementation of remedial actions to address the audit findings. And I think with EWSETA, it's because you will see they're coming from a history of unqualified finding, but we now find ourselves in a situation of a qualification where again, it actually emphasizes on the point that I was raising earlier to say there is a need for us to reflect holistically on what would have caused the findings to be raised in the first place, as opposed to dealing with only what the auditor would have communicated is a finding. There is also a need to establish clear actions and timelines to address the material irregularities, which is of concern at EWSETA. And lastly, with regards to INSETA, we are indicating that it would probably be beneficial for the committee to obtain as well the audit action plan of the CETA and closely monitor the implementation thereof, so that there is that form of accountability as well to the oversight committees in terms of what are they doing to make sure that the issues that have been included in the audit action plans, the remedial actions that they have committed themselves to, are actually being implemented, and are they actually effective, and are they also timely being implemented, because that is another issue that we also then just need to deal with in terms of the issues that have been raised, to ensure that at the end of the day we don't see repeat audit findings that then lead either to the modification or stagnation in either the financial audit outcomes or the material findings that we are reporting on in terms of the performance reporting. So thank you, Chair. I'll stop here and then hand back to Zama and take comments and questions from the committee. Thank you, Chair.
Thank you, Nana. So, Chair, I'm not going to labor much on these two entities, but I think it's quite similar to what we would have even presented with construction CETA. It's one of those, the two entities are the ones that would be needing attention from everybody in the ecosystem, because there's a lot that is taking place at the entities that would need particular attention, so that those gaps that we are picking up are actually closed, that ultimately we can actually see a change in those particular areas, especially at EWSETA, where we're picking up quite significant material irregularities that need to be closed, and ensuring that they don't happen again in the CETA. But I'll hand over back to yourself, Chairperson, and then we can engage on the documents.
Thank you very much. I'm going to ask some questions that have maybe little to do with these two specific entities, just to get your sense of the pattern in the whole CETA environment. Because if we take the National Skills Fund, and I know it's not a CETA in the same sense, but if we take the National Skills Fund and the issues that we've dealt with there before as a committee, at least the information that has been presented to us before, and we take the three organizations that you presented on today, there appears to be a pattern to me. And that pattern involves money being transferred from, firstly, a management that does not appear to take governance and management systems seriously. Instances where it appears that the financial statements the only way to lessen the material misstatements in the financial statements is when the audit process begins, which appears to point to a pattern of either not doing proper monthly or quarterly financial reports properly, or just not doing them at all. I'm not sure which one is the case. Audit committees which appear to not be able to have the kind of impact that they need to have in an organization that receives money from the state on an annual basis. But also the reliance on service providers whose capability, and I want you to comment on that specifically, but whose capability appears to be anybody's guess, and that there is a disjuncture between what the policy and legislation intend to do, the quality of the management and operations of the entity that is supposed to implement the skills policy, as well as the oversight of the procurement process, as well as the performance of the skills training work as it is, and making sure that the outcomes intended are consistent. That appears to me to be my impression of the skills development environment as a whole, excluding universities and TVETs, because we haven't received presentations specifically on those. That's my sense. You look at the entire terrain more specifically, and I want you to say where maybe I'm mistaken, I'm not correct, I'm overstating, and also just to give the committee your insights in general. Thanks.
Thank you, Chair. Chair, no, your assessment is quite correct. And I'm glad that you liken it to the NSF, because their processes are the same. You'd see that even when we get to a point of actually doing that holistic picture that we were talking about earlier on, the NSF, so we do the 21 CETA, including the NSF, because their processes are the same and they follow the same process. And you are correct in that this is money that would be sent to the service providers. And one of the key things that we had even communicated in the portfolio, particularly at the NSF, is the over-reliance on the service providers. Because how we even got to where the NSF was, even when we even were at a point of issuing a disclaimer of opinion there, is because the projects unit were not necessarily doing what they meant to be doing. And then relying that the service provider is going to be, you're just going to give the money to the service provider, and then you expect that the service provider is actually going to have those processes and get to a point of you actually reporting on the financial statements, which is not necessarily how it should be. And hence, when we talk of the CETAs as well, we put the emphasis on the project units, because the project units would be the ones that are not necessarily playing their part. So if you were to drill down to where focus needs to be in the particular CETA space, it would be the project units for the different CETAs, because those are the ones that are meant to be having that relationship with the service providers, so that there is that project management, you'd use that holistic term, that project management, in ensuring that there is, once money has been transferred to a service provider, there is follow through from the entity itself to make sure that the funds that would have been transferred to the service provider are actually going to be implemented for the skills initiative as per the plan, and that it's going on as planned, so that ultimately the students would be getting the final product as and when it is required. But you find that there's just a lot of reliance on the service providers to actually just go out and do what they're meant to be doing and then report on the entities, which ideally should not be the case, but that is what we are seeing is happening on the ground. Hence, basically what I'm saying, Chairperson, is that your analysis is actually correct, and I'm glad that you're liking it to NSF, because it's exactly what would have happened at the NSF as well. The result, you'd find that we also talk about project management at the same institution holistically.
All right. Thank you very much. Honorable Mente, over to you.
Thank you, Chair. No, there's something that's quite interesting, Chair. Yeah, in South Africa, there is this new practice now, and I picked this pattern up with the SIU investigations as well, that departments or entities pay service providers to start projects, meaning which a program, or rather requirements for any service provider to qualify for a certain project were never followed from the beginning. So for them to give them a capital that will pay money upfront without anything. And I want to understand from AG if maybe perhaps upon their own investigations looking into this matter, they didn't pick up that kind of behavior. Because we can't have a situation where 15 million is paid, not even one deliverable is delivered. And it begs the question as to, at this point in time also, timeframes when the EWSETA on one instance and on slide 24, they were notified 10 November 2023. Yet there's nothing recovered. And there's not going to be anything to recover because when they made those payments, those people had absolutely nothing. And at this point, we're going to send SIU or all the law enforcement institutions of South Africa to deal with the matter of investigating how did this particular transaction come about. We are going to equally be engaging in an exercise that's not going to be fruitful in terms of recover any funds. However, it will be fruitful in terms of uprooting criminals and thugs that are taking money from the state. That's number one. And then number two also is on the second transaction, AG. These people, the purchasing and refurbishing of a building and not occupy it, and then being notified on the 20th of November. To date, you are still being provided with a response as to what is happening there. Why would it be taking so long for the CFO to know what is happening? For the CEO to know what is happening? For the chairperson of the board to know what is happening? After all, this is their own resolution because there isn't a single entity that can just buy a building without the resolution of a board and the executive. I just want to understand what is happening because if we're going to deal with these people, it's very clear what we're dealing with. But AG assist us as well as to what are the reasons for them to take for so long to provide sensible information as to why are these things taking place. Thank you, Chair.
Thanks, Honorable Mente. Over to you, AG.
Thank you, Chair. Thank you, Honorable Mente. Just on the first point relating to the trans payment and I fully agree with the member in terms of the process, and it's something that would happen, throughout the CETA space, even including the NSF, that you'd find instances where payments have been made. I think the issue on the war and leaks MI that we have is a typical example of that, where there's a tranche payment that is made, whether services would have happened for that particular instance or not, but payment is actually being made. So it is a process that is taking place in terms of how they structure the MOAs, which is the service level agreements with the service providers, where they would be, some CETAs, where there would be payments that are made before certain services would have taken place. So I agree with the analogy that would have been made by the member. It's something that we would have also picked up, even with the NSF as well, especially the NSF, because the NSF, it's mostly they first make a payment even before the services are happened. It's just that the consequence of that is that that's where you end up finding instances where ultimately when the project is finalized, you find a situation where payments have been made and no benefit has been received by the institution. But the way that they structure their agreements with the service providers actually allows that process to take place, which I guess it's something that would need to be looked at in terms of what legislative limitations can be put in place to avoid a situation like that, because we find ourselves in the instances or in the situations that we are in now where payments or overpayments are being made or money is being lost through the system because of how their MOAs are structured and allowing this process to take place, especially if you also don't have processes where there's that project management that is taking place to ensure that when money has now been transferred, there is follow through in making sure that the services are actually taking place. But it actually does put us on a back foot because, like the member has said, the money would have already been spent or sent to the service provider. So in as much as I have yet to see a case where the money is actually paid back, like you said, one of the old ones would be the construction one, where we would have had the MI issued quite a while back, but there isn't really any money being paid back by the service providers. I would even think of similar examples where we've had MI at NSF as well, quite similar, but money has not necessarily come back to the system, mainly because it becomes a tedious process. But basically, I agree with the analysis that is made by the member, and it's something that we would have also picked up in terms of the structure of the memorandums of agreement with the service providers that allows certain instances where payments can be made even before the services are actually being implemented, which results in sometimes inefficiencies that we actually pick up in the system. And then the next question would have been asked relating to the MI at EWSETA. The CETA would have requested for an extension. I guess it's a similar thing. I'm going to keep saying almost the same things, in that what we're finding is becoming a problem is the speed in which the CETAs are actually responding to some of the material irregularities that we would have raised. Because like the member would have mentioned, this one is quite clear because this is what would have happened. They know about the building that would have taken place. So ultimately what we're wanting from them in terms of a response, not only just in terms of what would have transpired, but what are they doing to actually make sure that there's consequence management, investigating, make sure there's consequence management, and then if there's money that needs to be recovered, that process needs to take place. So it's a process that is taking longer. The feedback that we would have received is that they requested that they needed to have a board seating first before they actually responded, because ultimately, when it comes to material irregularities, it's not really something that we're wanting a response from a CFO, because the accountability is lying with the accounting authority. So they had requested that they be provided with an extension to give us feedback on the 7th, stating that they wanted to be able to give us detail in terms of how they're actually dealing with the material irregularity. But I do agree with the member that what is concerning to us is the speed in which the entities are actually dealing with these material irregularities, so that we can see the accountability process actually taking place quicker rather than later. Because what we also not wanting to see is instances like we have seen at Construction CETA, where by the time the disciplinary processes need to happen, if it gets to that, it's people that have already left the institution, because it takes time to actually implement some of our recommendations. But that is the feedback that we would have received from the CETA with regards to this particular MI. Thank you, Chair.
Thank you very much. Do I have sorry, Honorable Member, do you have any follow-up?
Yes, Chair. I have two. One, a request to you that if our back office can take it, break down the request to the entity when they are coming, especially on these two particular transactions. They are very interesting in the way in which they have answered the AG, which obviously is a cover-up, because the speed in which is going, it gets to tell you that we must try and find information elsewhere. Once it takes more than a week, that's something else. But then number two, I want to understand from AG, out of interest, if obviously there will be those memorandum of agreements, especially in certain instances where massive projects are going to be embarked on, remembering also the background of many, especially if the identified service provider is coming from a not so privileged background, as we are catching up with a monstrous system of capitalism and trying to level the field in order for other businesses to come into place. But then, even if that is the case, where we're trying to meet a service provider halfway in order for them to deliver, there should be a process within that memorandum of understanding which says every quarter or every month, we're going to have a follow-up in terms of your deliverables. So it doesn't look like in this instance there was such in these agreements, because we want to understand from your point of view if these agreements are only made without provisions of accountability. Equally, are the entities not engaging in a monthly inspection, which ultimately will lead to quarterly audit statements of the entity? Because to get to you coming there after a year, there are quarterly audit statements. What was playing out throughout that particular financial year? And what are the quarterly audit statements saying? Are there any inspections that are included in this memorandum of understanding, or it's just an agreement that will give you money, no accountability, nothing? Please give us a picture. How did it get to a year without anyone saying that nothing we're going to get out of this? Then let's stop. Thank you.
Thank you, Chair. So in terms of the MOA would have provisions for the accountability process. I think hence when we talk about now drilling down to where the problem is, I always stick to putting it on the projects unit. Because if an MOA is indicating that, I will just take, for example, even the one that would be the NSF, the MOA would be indicating that at a certain point, there needs to be proof of expenditure that would have been incurred before expenditure is paid, or the next tranche, there must be evidence that there's been training. If there was a training that was meant to have taken place, there is attendance registers and all of, so the MOA would actually be quite specific in terms of the deliverables over the period. But the problem lies hence I always say that there's just that reliance that the service providers now just gonna go and do that. The problem lies with now the projects units who are meant to be doing a follow through. So in terms of like, it is an ideal situation that you're referring to, in that on a monthly basis, there needs to be inspection of these projects to see that are they going according to plan. On a quarterly basis, a summary in terms of is it where it's meant to be as per the plan that would be there, because the MOA would then be supported by a project plan. All of that information. But what we're finding is that the projects units are not necessarily playing that project management aspect, because when we talk of project management, it's specifically speaking to what, on a monthly basis, visiting the project, seeing that this is how much training has happened. This is a number of learners that would have dropped out. So now currently you're expecting that the service provider is only training 5,000 instead of the 10,000 that would have agreed in the beginning. And then on a quarterly basis doing a summary of the project. So it's ideally what's meant to be happening, but it's not necessarily happening consistently throughout the year. Hence, you find that at the end of the year, you're picking up that payments have been made to a service provider, but the deliverables that were meant to have been done are actually not necessarily there. Hence, you get a situation of the material irregularity that we spoke about at Construction CETA. So there's an ideal situation, how it's meant to be done, but in terms of dealing with the root cause as to what would have transpired, it speaks to the projects unit in the institutions that are not playing their part in actually making sure that on a regular basis, they visit these projects, they track the progress of these projects and able to account properly for how much has actually taken place for the particular project so that they account for them correctly on the financial statements. So the MOA process, I think it would be, call it watertight when it comes to the accountability process. It's just the implementation that becomes a problem from the different institutions, which is why we always talk about the root cause of it being the project management that is not taking place. Thank you, Chair.
Thank you very much. Honorable Neil May.
Sorry, Chair.
Oh, sorry. Okay.
No, Chair, just a recommendation. I think a forensic investigation into these two would be very interesting to see the flow of money. I don't know how you'll deal with it, but it will be very much interesting to see that. Thank you.
No, thanks, Honorable Mende. So, speak under correction. I think these same entities are coming on is it the 27 and 28? This is 28, 20. I'm not sure if Feb is the 29th this year, but there's 2 days we've set aside this month for these two CETAs to come. But I agree with you. The only challenge I've got is that I suspect this is a general pattern everywhere. And we need to just decide whether we do them individually or we get a blanket proclamation across those that appear to be seriously affected. But I agree with you. Honorable Neil May.
Thank you, Chairperson, and thank you for the presentation. Chairperson, from a bird's eye view, your assessment and analysis is correct. I basically had the similar view. And the money that is given to service providers, which makes me think in the sense of, if you look at most of those service providers, they're driving either a SUV that is R1 million. You look at the Range Rovers, the Jaguars, and one must wonder, should we not be doing a lifestyle audit of the companies, of those service providers that are getting these projects and are not completing them, or are not, so that we can actually recoup the money. The other thing is, obviously, listening to Honourable Mente, I fully agree with her with regards to the reporting. And the question that I have here for the AG, and it's a question that we should be asking all the entities and municipalities and everybody that we work with. There are monthly reports that go to Treasury. I know that for a fact. They monitor. What is Treasury's role in all of this, in the sense that what is Treasury's opinion of this? Because we keep giving money to these to the CETAs, and yet for 3 years, if I was the minister, after 2 years, I would say, let us relook at this. There's a challenge here. 3 years non-compliant, one with a regression. One would actually think maybe more people need to say no more money, because we need to first assess what are the challenges. Because if you look at 32.1% unemployment of youth, and you look at only 600 learners trained here, 600 there, you would think that would be for one metro or one province, not nationally. And then my question is, are we getting value for money? Are we actually achieving our goals? And I don't think we are achieving our goals. I think the whole system needs to be relooked at, because we just seem to be doing the same thing over and over and expecting a different outcome. I think that is just basically my take. I think we need to look at lifestyle audit on all the officials that are dealing with projects and management. And looking, as you said, with the SIU, I would say a blanket approach would go for all these entities, because NASFIS, the CETA, EWSETA, INSETA, it's the same pattern. And I think we're wasting money. If you look at this, we are really wasting our taxpayers' money. Thank you so much.
All right, thank you very much. AG, I don't know if you've got any comments to that.
Yeah, I've noted the comments from the honourable member, Chair, but I think it's more to the committee than us. But I think I also noted the question in terms of Treasury's role and opinion on the matter. I think it's something that maybe the committee could also explore in terms of engaging the National Treasury in terms of what, because we look at it in terms of the whole ecosystem. They also have a role to play in terms of this entire process. So it would be interesting to see what they would also have as a response in terms of how do we respond as a country on it. But yeah, I don't have anything additional to check. Thank you.
No, thank you very much. Honorable Skosana, I thought I saw your hand.
Yes, Chair. Thank you, Chair. I think, in my view, the AG SA on this matter, I think we need to, perhaps when the minister comes in, most questions should be directed to her and then the board chair, if he'll be around, but I think they have to be called here, and the CEO. I think that would be the best thing, because for now, indeed, it shows that the AGSA, they've tried whatever they've tried, but there's a lot of things, which one has to find out exactly how are they operating. For instance, the issue of stipends, which we've spoken about, yeah, but let me leave it there, Chair. Thank you. So that's a comment.
Yeah. No, thanks, Honorable Skosana. So I've got the date here. So these CETAs will be here on the 26th of February. 25 February is ESCOM, and then 26 February, we've got the whole day on that day to deal with them in turn. What we will have to do is to basically to get straight to questions, rather than they can make an opening statement and deal with some of the issues raised in this conversation proactively. But I think the members, upon receipt of further briefing from the Auditor General, we should really go straight to questions when they see us on that day, so that we can make maximum use of the time that we have. I don't think there is a reason to invite long presentations from them at all, given the information that we have received. Members, I'm just looking for hands and I don't see any. I'm just going to give one more consideration to anyone who may have a question. Honorable Mende.
Yeah, thank you, Chair. No, supported, Chair, provided that the entities must give us information so that when your office and Ntombi, then you do allocation of areas on the CETAs to members, so that each member knows I'm going to study this following area, and then we shoot for questions. It becomes much easier that way. I support your idea, but make sure that they are giving us the information which we will require. Then they don't need to do a presentation. We would read the presentation, we are fine. Thank you, Chair.
No, agreed, Honorable Member. In fact, we're going to send them, and to the extent that members might have questions that you think of in the next 24 hours or so, please send them to us. The idea is to send them a very detailed presentation. So what we will do is we will then, I think it's best, in my discussion with the Secretariat yesterday, it's best to divide the members by entity. Because there are 3 entities, so that we can then, each group of members focuses specifically on that entity, and then the other members can ask follow-ups. But we'll send them detailed questions, which they must answer ahead of time, and then we can consider those answers plus inputs from the Auditor General. Following that, we must have the Minister in short order. So we're going to find a date for the Minister already. We won't wait for the Setas to come. But she must come shortly thereafter to account for the whole ecosystem, because clearly there are serious problems with CETAs, NSF, NSFAS. It's actually quite depressing, and a lot of South Africa's budget goes to education and training, and we must start to see the result for it. Can I also ask the Secretariat, or I will ask the Secretariat to just invite someone from the SIU to be present, especially on the 26th in particular, just to kind of observe. Members, I don't see any further hands. I think the matters are quite clear. So, Ms. Mdisho and team, thank you very much for the presentations that you've made to us today. There will be further interactions between yourselves and the committee, but we'll liaise with your committee, with your parliamentary liaison team, to make sure that we can have a further conversation to prepare for the specific questions that we want to pose. We don't want to leave any critical questions out, but also in terms of the specific detail that we need to ask for from the Setas, especially with some of the case studies or problematic areas. But that will be an offline conversation that we'll have. It doesn't have to be the entire team. We just need someone on each SETA who is quite au fait with the issues, so that we can send questions that are as detailed as possible to all the entities, and then the minister. But otherwise, to you and Nana, thank you very much, and all your colleagues that have supported this work and the presentation here today. We really appreciate the work that you're doing. We know that it's challenging. You make recommendations and they say, okay, we're going to do it. And then you see them again and you go, we're back here again. I know it's a thankless task, but we really appreciate the work that you're doing. And I know the members appreciate the work that you do in empowering us to do the oversight that we need to do. So thank you very much for being with us today.
Thank you, Chair.
Okay, members, I think we'll call it a day at this point. We will then do the necessary follow-ups and keep you appraised. But just so you know, for your noting on the calendar, we have 25th ESCOM on governance update, as well as their financials. And then on the 26th, we're going to have the SETAs. Thank you very much. We'll see you tomorrow.
Thanks, Chair.
Thank you, Chair.
Thank you.
Thank you.
Tango.